Hi, my name is Dion, and this is the Bullion Vault. Hi, Willem, how you doing?
Good news, Dion.
Very good, thanks. So this is episode 24, and we've had quite an interesting week that we've just been through with the whole Iran thing. What's your thoughts on that?
Yeah, we're definitely seeing an escalation in the Middle East there, and obviously that has a massive impact not only on that region for obvious reasons, but also on the global economy. And the biggest reason for that is, of course, oil. And if we see this Middle East crisis, this Middle East um, clashes and tensions and escalate throughout the region, we could be in for quite a wild ride there.
Yeah, and again, we know that with regards to gold and bullion, gold is considered a safe haven asset. So its continuous growth that it has been, it's had an unbelievable 2025 so far. And this would just keep it spurring on. I mean, just to check the numbers on gold from last week to this week, it's pretty much lateral in its movement. But this would continue to push it into the higher 3,500s and possibly close to 4,000. As you say, if it escalates, that becomes a real, a major issue.
Yeah, and I think the biggest reason for it is, I think it's about 30% of the world's oil comes from the Middle East. So that's the first problem. We see conflict there. There's a shortage happening on oil production, and we see the oil prices rise. Now, as the oil prices go up, obviously that has a knock-on effect to literally every aspect of our lives. The food we grow, a farmer has to put diesel in his tractor to plow the fields, and if there's a rise in the diesel price or in the oil price, then obviously there's going to be a rise in the cost of productions for that farmer. That then needs to be transported to the mills which run on, trucks that run on oil or on diesel. And all along the whole supply chain, there's oil involved in every single step. And I think it was JP Morgan that said that in the worst case scenario, we could see oil prices of, I think, something like $130 a barrel. It's sitting at, what's it, around about 75 now.
Yeah, I think it was about 75, $78 a barrel. Yeah.
Yeah, it spiked and then it's drawn back, but I think it's still up something like almost 8% of where it was before these tensions. So that's an 8% rise just on the price of oil. And obviously, the higher the price of oil, the higher the price of literally everything is going to become, and it's going to be a global problem for the economy. It's going to make it more difficult for central banks to control the interest rates, and it's going to have a knock-on effect on just about every economy in the world. The other issue is, of course, um, should they decide to blockade the Strait of Hormuz, and that's, I think, about 30% of all the world's oil flows through that strait. And once again, if it gets blocked, there's going to be a drastic oil shortage. Oil prices are going to skyrocket. And basically, as we've been saying, that is the entire world economy is going to feel that. So, the best case scenario, there's a de escalation of tensions. The oil price will sort of drop back to where it was. Normal will be restored. There won't be any serious long term complications because of it. But the biggest issue is if it doesn't and if it actually escalates, and we could be in for some serious trouble then.
The other side of it is that war generally is also a good stimulator of growth within a country. We look in the States, we look in previous wars where the economies were, the economy in the States was faltering, or even in Europe. And war brought that rejuvenation of actual production of things. And it's a fact. The States is in a position right now that things are not great economically, and that we've been tinkering on globally a recession of some form slash depression, and this kind of could just push that out a little bit further, stimulate some more growth within that economy and economies across the world.
Definitely. And I mean, you're talking about the US economy. I mean, usually when something like this happens, something of this nature, you look at emerging economies, and they're the first to take a hit. So normally, investors would opt for the safe havens. They would opt for your US economies and things like that. But for some odd reason, the rand has been extremely resilient despite all of this. It's just hovering under 18 rands to the dollar at the moment, I think.
It's just over. It
Just
broke,
over.
just
Okay.
broke
But
over 18.
it's hovering around that 18 rands to the dollar. And this is despite investors who generally in these times favor your more developed economies.
Yeah.
And as we know, the rand is actually sort of a proxy for sentiment towards emerging markets, due to our deep capital markets and by developing economy standards. So it's sort of a barometer of what's happening in the developing economies. And if we look at that, it's been actually a bit more optimistic than we probably should have expected during this conflict.
And also one of the big things with especially with South Africa is yes, we tend to be the flagship of the emerging economies, but our economy is not great. I mean, we are tinkering on literally zero growth rate right now. I know that the Reserve Bank is due to meet on the 31st of July for a decision on a rate cut or rate increase. We know that fuel's going up, as you mentioned, oil's going up. That's going to get passed on to the consumer, as you said. So there's a lot of things, if we look at the macro level and the micro level, we start to actually see that a lot of these knock-on effects do affect us directly.
Yeah, definitely. And I mean, any country that sort of imports oil is going to have at least some degree of effect by this. Um, but yeah, you were talking about the precious metals earlier, and I just want to mention the star of the moment, which is of course silver.
Yes.
So we were talking, what was it, probably about a month ago or so. We were saying that the gold silver ratio has reached 100. And if we look at what's been happening over the past month, I mean, silver is up by, I think, about 28% over the last 6 months. And 14% of that has come just over the last 30 days. And that is absolutely insane. And as I was saying at the time, we're going to see that gold silver ratio close down. And it's not going to be because gold is coming down. Gold is still sitting at 3,300 and something, 3,400, sort of teetering up and down between those levels. So it's a little bit more erratic than we used to, but it's sort of holding there, while silver has just absolutely erupted over the past month.
Yeah, and again, you mentioned it. So we're sitting on about 30, just over $37 an ounce on silver. And that's the growth that we're talking about. That's also that during these periods of time, that silver is always slow to start, and yet it catches up to gold and then it over outperforms gold hands down. And that we can cross-reference over the last 4 or 5 decades where it's consistently shown that same growth, that same pattern.
Definitely. I mean, if we look at some of the institutional investors, they said 30, I think it was 3660 was sort of the resistance level, and it's blasted through that, which now, of course, gives us a great bull signal for that run on silver to continue.
And that again, if you look at the growth in silver, we've spoken it on many times that the demand has been outweighing its actual supply. So this is also that knock-on effect to that. From an industrial perspective, it's been running at massive levels. So we always talk about the photovoltaic market, that's running on a 20% per annum. And that growth rate hasn't slowed down. We've spoken about the EV sector and also just the general use of silver through all of those different industries and how the demand has been there, yet the price has lagged, and no one could really understand why.
Definitely. And it's also very interesting that platinum is on a run at the moment,
Yes.
which is another industrial metal. It's a catalyst. It's used in surgical implements. It's got so many uses. And it's very interesting to me that both these industrial metals, as we call them, is on a run while the economy is not exactly doing great. Because usually the economy or industrial metals like that is an indicator of the economy. You know,
Absolutely.
when there's more demand for production or whatever the case might be, you see a higher demand for those metals and you see the price go up. But right now, the economy is sort of just, puttering along in neutral. And we're seeing this massive rises in the industrial metals, and that is very interesting to me.
Yeah, and again, I think it's got a lot to do with this general commodity boom that has been on the cards that we've spoken at length about. And it's good to see that platinum is starting to regain some of its losses, but it is definitely a knock on to its applications. As you said, it's a key catalyst in many different applications. And again, you look at silver, it's low entry barrier into the market from an investor perspective. You know, an ounce of gold, you're looking at 3,300 odd dollars an ounce versus $37 an ounce. Same weight, just different prices. And those price points allow the entry level investor that opportunity to start buying into precious metals and start to benefit on some of that growth. The growth rates that you've just spoken about now with silver are phenomenal for this early part of the year already.
Yeah, I mean, it's been absolutely insane. And we always say, silver follows gold and then outperforms it. So gold has been on an absolute rocket ride over this year. And let's see where silver goes, because that could be very, very interesting to see where it's going. And as you said, because of its price point, it is a very good way to get into the bullion market. I mean, very few people can afford to just whip out the 61, 62,000 rands to buy an ounce of gold. A lot more people might be able to pay 700, 800, 900 rands for an ounce of silver, or even a half ounce. It's just such a beautiful metal for actually getting into the market and starting to invest in precious metals.
Absolutely, it's completely accessible. And also, like with gold, it holds that it's no longer held to a currency. So you can literally take some of your rands, put it into silver, and suddenly you're not going to be affected by the rand. Yes, the rand has weakened to the dollar, and that's where you have those benefits of holding a dollar-based commodity or hedged commodity, is that it allows you to enjoy the benefits of a devaluating currency. And again, we've been through this many times. The rand, as you mentioned, is tinkering around 18 rand to the dollar. But we know it's going to go back to the mid 18s, to the mid 19s, and into the 20s. It's a given on its natural growth through the last 20 odd years.
Yeah, I mean, we've just spoken about the Middle East conflict, how the oil supply is going to have a knock-on effect on especially emerging economies. And that could also push the rand further down. And pretty much any emerging economy, you could see a devaluation of their currency. And that is, of course, always the biggest danger of holding all of your wealth in something like stocks or bonds or a RA or something like that. It's all based in your local currency. Yes, you might still get at the end of your RA get paid out your 20 million rands for your retirement. But hey, guess what? Your 20 million rands might be worth only like $1,000.
Exactly. And that's reality. And that's part of the message that we always speak about is getting your wealth out of fiat currencies and putting it into commodities like gold, like silver, like platinum. You know, they have shown growth. Platinum, like you mentioned, has been very big. The growth in platinum over the last couple of months has actually been very good. And it does also lay a platform down as to where it's going to go over the next probably 18 months.
And obviously diversification is
Yes.
key. It's fine to have some stocks and bonds or whatever in your local currency, but don't tie yourself down to just that. Get some of it out of the fiat currency, get some of it out of rands. That's always what we're saying, is just get a part of your wealth out of rands, because that might be the part that ends up saving you, because you never know what's going to happen. I mean, we could see something that pushes the rand down to 25, 30 rands a dollar, and just the loss of value or the loss of wealth because of that is going to be absolutely devastating.
Absolutely, and I think again, I mean, it's a message that we've spoken at length on this channel. But you know, I came across something today which was quite interesting. I mean, we follow a number of people ourselves, industry experts that we believe have sound, knowledge, and a lot of the time it's based on research. And that was how, even when I founded this business, we looked at the same thing, that we needed to make sure that what we put out there, we can back it by information, we can back it by reliable sources, and so on. And hence that's how the business has grown. So old Mike Maloney, you know him.
Definitely, who doesn't?
And he's been in the sector for, I think it was more than 20 plus years. And he's just, and we'll put the link onto for this article. It's a YouTube video, where he speaks about gold has entered its third and final stage, why $10,000 per ounce could be coming. And what's interesting is we've spoken at this about the Kindleberg and Minsky model, and how that initial stage is the smart money. It's not where the masses are, it's where the people coming, your investors, or angel investors, where they're investing into something. They make the big money out of it. You then go into that next phase, which is the institutional investors. And then, of course, the third phase is media attention, which triggers normally that massive rise in whatever commodity or product we're talking about.
Yeah, and I mean we've seen that throughout the years on, I mean, mention a commodity, tulip bulbs, Bitcoin. We've seen that over and over again. And of course, what comes after the mania phase, the bust phase. And that's where you need to be careful.
Yeah, so what's quite interesting is he compares the 1979 1980 gold rush, and he then actually overlays it with the current, where we are with the current gold boom. And what was quite interesting from the article is, if you compared 1980 to today, there are 35 times more currencies in circulation. There are 56 more times billionaires in the world, and then over 200 more billionaires that are currently around. There are also 31.5 times more assets under management. So there's showing, like, from the 80s, where there was this rush, and it was limited to the amount of people that could actually buy into that commodity. Now suddenly you see that there's this massive pool of resources. There's this massive pool of availability of actual wealth to start to take on and buying in gold. So his expectation, he's saying, is $10,000 possible? And the answer is, based on just those things, it's not unlikely that it could actually happen.
Well, I'm sure it's going to happen at some point.
Yes.
You know, obviously, it's going to happen at some point. But the question is just when, how soon it's going to happen, of course. Um, it's if we go back when I started and you told me we were going to be looking at $3,500 an ounce of gold, I would have told you, get out of here.
Exactly.
And we're there, and that's been over the space of 5 years. So that's, I think the most important thing is never say never.
Yeah, and again, it's the underpinning things. What's the $10,000 per ounce? What's the underpinning things that could make it happen? And top of it is the rising of geopolitical tensions, which you've mentioned. We mentioned the Middle East, and that is a tinderbox right now. And it looks like no one's prepared to back down. And that is a concern. Again, from a South African perspective, is we have a lot of connections to Iran from the supply of oil. So that could affect our own supply. To a degree, of course, we do rely on the good old Sasol, which I still don't understand how we pay for our oil that's made from coal, and we charged on the oil price based on crude oil. That still is something I'd love an answer to.
Unfortunately, I don't have the answer for that. But as you said, we're already seeing a price increase. We've got a price increase in petrol coming right up right now. And okay, part of it is due to the new tax on petrol, which is going up. But we're seeing an increase in the petrol price happening right now, and we're probably going to see another one in the very near future, because oil price is based, or petrol price is based on two things: the oil price and rand to dollar exchange rate. Right now, the oil price is $75 a barrel. That is, I think it's something like 7 or 8% higher than it was before the conflict started. So there's this increase in the oil price. You can bet your bottom dollar Sasol and the government's not going to swallow that for us.
No.
We're going to pay for
And
that.
neither will the shops, but or anybody, through that, as you mentioned, the whole supply chain is ultimately the consumer is the one that carries the bill.
And unfortunately, it's understandable. I mean, you can't expect companies to just take it on the chin and say, okay, well, we'll keep our prices low because we love you guys. I mean, maybe they do love us, but that doesn't mean they're going to go lose profits over it. Unfortunately, they have to make a living. They've got people working for them. They have to support. They've got properties, etc., etc. They have to make their money, and eventually, what it comes down to every single time is the end consumer is going to pay for it.
So just on finishing, old Mike Maloney in this article, and please, it's a good listen, but he mentions here for every ounce of gold and silver you own today, you're going to be able to buy many, many, many times more stocks, bonds, real estate, and businesses down the road. And this is someone that's literally laying it all down on the table saying, people tend to forget, and we mentioned silver's entry price, that it is economical, that there are people, even with gold, there are programs, there are systems out there that allow you to buy fractional or grams of gold like we have. And so it's available. But the important thing here, and what you're also highlighting with all this impending increases, be it from fuel and groceries and living expenses, is that the means for that extra little bit of money on the side for savings becomes less and less and less. And this is where we're saying again, bear in mind we are where we are, and this is a very important phase to make sure that you are committing some of your resources, be it a small amount, but into physical bullion.
And yes, as we said, it's just that diversification, and you don't have to buy an ounce. That's the most important thing. You can buy a half ounce, you can buy a quarter ounce,
You can buy a gram.
you can buy a gram. I mean, and that's the thing. It's important to just at some point start diversifying, start getting into another type of market. Even if you have your retirement annuity, and even if you have investment somewhere with one of the big banks or one of the big broker houses or something like that, you know it's important to just diversify that little bit. And it's something that you can control. It's something that you are 100% in charge of. And as always, we're not financial advisors. If you want financial advice, go speak to a professional, and
Or certified more
a
specifically,
certified
yeah.
professional, yes. And don't just take the word of two guys on the internet. It's what we always say. We try and keep the information as accurate and as help beneficial as possible. But you know what? Don't just take our word for it.
Also, just closing, and he finishes that article with the question isn't whether gold will rise. It's a given it will. It's whether you are possession before the stampede starts.
And we're back to the Kindleberger Minsky model.
100%. In closing, Willem,
Yeah, I think, well, it's going to be quite interesting to see what develops in the Middle East right now, and it's going to have a knock on all over the world. It's going to have an effect on the world economy. How big that's going to be, we unfortunately we just have to wait and see.
again, we also look at the East, and we look at China. There's so much that could just spur off a greater war. And we've spoken of this before, is North South Korea, Taiwan, all those kind of things. It just needs a few little sparks, and suddenly we go from a minor conflict to a major world war.
Definitely. Well, I'm just going to hope for the best. If you liked the video, be sure to hit the like button. And if you want to see more, subscribe to the channel. And we'll see you guys next time.
Take care. Thank you. Bye.